Hello, good day everybody, it's Pisa again, your number one trading pal. So today we'll be talking about Fibonacci, and then since we'll be talking about under Fibonacci is what is Fibonacci in Forex, why Fibonacci matter, and then when Fibonacci work the best. So without wasting much time, so let's just dive into everything here. First of all, what is Fibonacci in Forex? So according to ChatGPT, Fibonacci in Forex is a technical analysis tool traders use to spot potential support and resistance levels. Basically, area where the price might pause, reverse, or continue its move. So what that means, you can see here, this is a support zone, and then this is a Fibonacci tool. You can see how this Fibonacci give a clean support zone here, and then the market push up, still give another support zone. So that is what is made by Fibonacci helping giving support and resistance zone. So, and then the key level trader care about 26%, 38%, 50%, 61%, and then 78%. And people do mark this 61.8% as golden ratio, but according to my own research, all this don't work that much. So I will show you my own settings that actually work the best for me, and then it work more like a magic. So look here, this is my own settings. I use the 30%, 50%, and the 70% zone for me, and then it work actually like a magic for my own support and resistance zone. I will actually go to the live chart to show you that. Here is a live example of a trade I am in. Actually, I am in this trade AUD USD buy. So actually I'm chasing about 400 pips, no, 350 pips in this trade, and then I'm risking about just 80 pips, which give me about 1:4 on this particular trade. And then let me go to the daily time frame so you can see the thing I'm talking about. You can see this swing, you can see the 70%, 50%, and the 30% zone. The market actually pushed to the 30% zone before it started exploding to the actual direction. So the second thing we have to talk about now is why Fibonacci matter. Fibonacci matter in Forex because it helps traders anticipate where price is likely to react. Note that where price is likely to react, not guess but prepare. Okay, here is why traders take it seriously. It highlights key supports and resistance zone. Markets don't move randomly after a strong move. Price usually pull back before continuing. Fibonacci shows high probability pullback level where buyers or seller often step in. So that we don't need that much. So as I already explained, so the higher supports or resistance zone, this is a very good support zone that the market push into before started moving to the buying direction. So that is that on that. So about the third, so when Fibonacci work the best, Fibonacci work best under specific market condition, not all the time. You know that Fibonacci do not work all the time. It work under specific market condition because Fibonacci is not a magic tool. It's not just something you draw your chart and then you just started moving, started giving you the signal you needed. Knowing when to use it is what separates beginner from smart traders. So I want to take you from beginner to smart trader now. So you don't have to be a beginner after you watch this video actually. Here is when Fibonacci is most effective. In a clear trend. What did you see? In a clear trend, because me actually, I only use Fibonacci with a trending market. I follow the trend with Fibonacci. And then when I'm actually following the trend too, I do not complicate it. I do not follow dead trend because some trend too are actually dead, but people don't know. Maybe you started the trend on the monthly time frame and then you expect it to be following only the trend. No, you have to break the trend down. That is what we call top-down analysis. So the second time to use a Fibonacci is after a strong price move. The strong and clear the move, the more reliable Fibonacci become. Best scenario, impulsive move, breakout with momentum, this driving move after Fibonacci volatility settlement. Weak short P moves is called to unreliable levels. When Fibonacci align with other factors, Fibonacci work best with confluences, multiple reasons for price to react, support or resistance level, trend line or channel, moving averages, candlestick confirmation, more confluent, higher probability. Actually, so Fibonacci can work with many different things, not just only one thing. You can print the Fibonacci on your chart and then be seeing your ICT, FMC, and chemistry, and all of that kind of confluences. At key market section too, if you are a day trader, then maybe we see Fibonacci in the support and resistance on the key market section, you will be very confident in entering the trade. On higher time frame, when used with patience. So actually we know a lot about this patience and all of that things. I'm not here to teach you about patience. We all know that, okay, I have to be patient if I want to use this. There's no strategy that don't require you to be patient actually. Then bottom line, Fibonacci work best when the market is clear, trading and liquid, and when we combine with other technical signal not used alone. So you can see this market. This diagram is showing a trendy market, very trendy. So even any strategy you want to use with this kind of trend, it will give you the best results so far. The best results so far. So let's come back to the real life example, the real chart. This is a daily time frame, and then you can see this clear swing. When I draw my Fibonacci and then Fibonacci come to the 30% zone, so I was so happy to follow the trend with that. So you can see I don't just enter the trade with that daily time frame too. I enter the trade with 4-hour time frame. So now let me explain this entry level for you. Look at this entry. You can see this support zone, very clear support zone around this 30% level. And then look at price action too. When price came here, the price push up, then started ranging, they move up. But when the price moved up, you can see how this candles is being chubby. This candle is not having momentum of going up. Then the market started pushing down, and when the market is pushing down too, the market do not push down with a lot of volume too. You can see as the volume is being chubby too. And then when the market get to this zone, the market started creating some kind of volume in 4-hour time frame, 4-hour candle. So with that, I was like, wow, everything I needed is like in line. Like 3 confluences at a go, a support zone, a 4-hour candle rejection, and then Fibonacci level. So with that, I was so confident of entering of this trade. So with this trade, I'm actually chasing 1:4. And then look at this trade. I'm expecting this market to break here, come back here, started moving here before then the market move to the upside down. So that's where I have the confidence of entering of this trade. It's nothing too complex actually, and then this is not rocket science. So if you actually get some kind of knowledge here, don't be stingy with your subscribe. Please try to subscribe, comment, share this to your loved ones, share this to your friend, share this to someone you know that is struggling with Forex and a lot. And then so I will see you in the next video. My name is Pisa. They call me Pisa. It's Pisa again, your #1 trading part. Peace.